Okay, so this is something I just noticed as far as trying to call the reverse of a short-term trend for scalping or day trading, whatever you want to say. And it's meant to keep you out of the chop. So this is a 15-minute chart of the ES. I'll move this over so you can see. This is I'm mainly making this for myself. I may publish it later to let other people see it too. It's just something that I I use, but I was subconsciously using it, and now I'm really going to focus in on it to try to catch a turnaround and keep me, like I said, keep me myself out of the chop. So what I'm looking for is this is the DM or the DMI on some different platforms. It's directional movement. So if the red line is above the blue, it's in a bearish mode. And same, this is the MACD here, and it is down in the red is above the blue there, and it's in a bearish mode. And what I'm taking note of is the length of this, how long it stays in that mode before it gets ready to cross over. So the MACD usually crosses before the DMI, and that's where the type of trading setup I look for in the pattern. This usually triggers right when I should be getting in the trade. Now, here's where the other day I did not get in where this crossed. If this high, if this low, I mean, had not been below this low, I would have gotten in above this high. But I went ahead and let it break that uh, point, that pivot point right there. And when it broke up and came back down, I got in actually on this trade above this high right there. But this is when everything was crossing over to go long. Now, if you look over here, same thing is happening. You got the long blue line above, the short or the red line is long. It's the period of time is what I'm getting at. So it stayed in an uptrend for a while. And I also got in. I forgot I got out with a profit. I got in again above these highs right here. That's those are four double tops there. And there was just a lot of pressure, buying pressure, but everything was so bullish. I took it and made money on it. So here's the other point though, is if you go on and since it's long and drawn out and smooth, you start look if you're going to short it. The time frame there is it's aftermarket. If you trade aftermarket, that's fine. I don't. And another thing I do is once I make profit for the day, I'm done. Because too much in the past, I won't say always, but a lot of times I give it back. And it's better just to get it out of your head and move on. So now here's another point I'm going to make where in the overnight it came down. And if you notice, the lines are spread apart. The MACD is starting to turn around, but this is so far apart. That's why I don't look at it until these things are coming together. And they come together pretty quick. But here, and the pattern I look for is this right here. It's 1, 2, 3 reversal, meaning now here was one that failed. Uh, a 1, 2, 3 reversal is where this piece cannot continue down in a downtrend. This candle turns around and breaks that high that it just made and goes up. Now here's where it failed. But what I've learned in probably the last few years is I don't take this 1, 2, 3 because here's a few things. Look how far away that red line is from the blue line on that DMI. Now the MACD is crossing; it's giving you a signal to buy it, but it went ahead and made it a lower low. You would have lost money, even though it is in the pre-market, and I do trade pre-market sometimes. Um, Another piece I look at is, and as you see, this was a lot closer here, and it crossed uh, right when it broke up. But also, this red line is the 21 moving average on my chart. So I like for that, the perfect scenario is either it's already crossed the 21 moving average that you're getting in on this point, or it's right up at it. So this 1, 2, 3, the 2 marker is right at the 21 moving average. So I knew if it came back down and could not continue on down, and these others, this is the 5 and the 8 moving average, they were crossing over on that candle. And that's a really strong trade right there. So, and like I said, I already know this. I'm explaining it in case I do publish this. And I want other people to know just my, excuse me, my mindset of how I do it. And let me go over here to, this was yesterday, the 22nd of April, 2023. Now here's a good example of why I'm saying all this. So here was the open, was right in here at 9:30, and look at this, it's a mess. I actually made a little money yesterday on this, and then I gave it back because I stayed in. I broke my own rules, but I stayed in. But look at the chop. There's no length of time that these things were spread apart. And that's why I say you want to look at this longer period where those two lines have been spread apart, like right here. And at some point, they're going to turn around. But here, there never was that time period that you could count on to be spread apart. So that's kind of what I'm going to be looking at in the near future, and I'll make some videos on it to see how it goes and kind of report back. But well, if you stuck with me this far, I appreciate you watching. I've been trading quite a few years, and it's an ever-changing game. You learn more about yourself than the market. It changes, but some things stay the same. But you can always count on it to change. You just gotta go with it. So thanks for watching, and I will see you in the next video if I decide to put this out. Take care.